Let's have Doug Flynn join us right now, certified financial planner and co-founder at Flynn, Zito Capital Management. Doug, thank you so much for being here. I want to talk about the market move. All three major indexes hitting record highs today. What are your biggest takeaways from today's activity?
Yeah, it shows that people are looking past some of the short-term noise of, is inflation going to be coming and worries about the bond market, and they're looking past and saying there's some good growth prospects out there. The consumers are in really good shape. We're coming out of the pandemic. People are going to get out there and spend all that money they've stockpiled. So I think they're looking past it and saying we're going to go to new highs. We got earnings coming out soon, and the profits are going to be off the charts, probably higher than we've ever seen. And the next couple of quarters look fantastic. So I think that's what you're seeing, that little bit renewed confidence in the market, and the Fed's not going to get in our way.
Is it looking past it, though, short term? Because we have seen just a decent amount of volatility on a day-to-day basis from last week to this week.
Yeah, I mean, the volatility has picked up, and I think that the bond, I always look at the bond market. I know it's boring, but you look at it because you get your cues for the stock market from the bond market. And that's how you can tell. And so you see that change in interest rates, that the move that we've had. And it got a little spooked last week, and then it's settling down again. I think that's what's happening here. When you're this low, very small percentage moves, actually very small moves are big percentages. So I think it's more extreme. But you're getting the cues from there that, look, rates are going to go a little higher. Inflation is going to be there. You have to look to the stocks and the areas that can do well in inflation, that have pricing power, that can continue to grow. That's what you really need to be looking for.
Well, I did see in your note that you mentioned that the bond market is really key to the stock market. It holds the key to the stock market. I think those are your exact words in your note there. We know that there's an inverse relationship between, let's say, example, a 10-year yield in the NASDAQ composite. But where else are you seeing that relationship and to what you said, holding it key?
It's funny because when interest rates are going up, people are fearful that we're going to have inflation that's going to put pressure on stock. When interest rates go down too much, they worry, maybe we're not in as good a shape as we thought we were, and the bond market needs to get lower to keep the stock market going. And so you have to look between there and say it's not just about the moves of going higher or going lower, but look at the trend. And the trend is inflation is going to pick up. We've printed a lot of money. The Fed has put a lot out there. People haven't come off all of the unemployment rolls, and they've stockpiled some cash. And so the bond market is going to have higher interest rates. Inflation is going to pick up. And so what you've got to do is just sort of have that as your backdrop. If you have that as the expectation, then you can move that over and start focusing on what are the areas, the sectors, the pieces of the economy and the individual securities that might do well in that environment, especially at this point.
So what are they?
The market's up. Go ahead. Well,
so I was saying, what are they?
The market's up 100% from the lows last March. How many times do you get in just over a year 100% market move in that short a period of time? You don't really get a lot of that. So at this point now where we are, and we're hoping for a correction. Look, a correction 10 or 15% or more would be a healthy thing. That's our entry point. But if that doesn't happen in the near term, you've got to look at the areas that have been unloved. Of course, we all like technology, and the profit growth there might be 35%. But the overall market's probably going to have about a 70 or 75% profit move upward in terms of earnings. And certain areas, like certain areas in consumer, industrials, and cyclicals, are going to be up over 100 to 300% in terms of earnings year-over-year growth. So those are the areas you want to look at. One other area I really like, which is really unloved, and it's the worst performer. I always look at the worst performer at a high point because it hasn't participated. Sometimes it's justifiable, but sometimes it's an opportunity. And that area is utilities. The reason I like utilities is because it's really a stealth green energy area where you're going to get that piece from, and people don't look to utilities during that period, and they don't look to it when interest rates go up. But behind that, a lot of those companies are really getting well set up for the green economy, and that can do really well.
I want to push you on the market correction, right? Because there are two arguments happening here in terms of market correction. There are some that believe that we have to we have to get a market correction, right? We've been up so much for so long. But there's another camp that are saying, listen, we have seen so many individual stocks individually correct. We have seen sectors correct that it doesn't make sense to see a full market correction. How do you defend that argument in light of that latter argument?
That's a great point. When you're looking at individual stocks, you always have a group of companies that I'd really love to own long term. They've got great fundamentals, but maybe they've gotten a little bit ahead of themselves. So you have them on your watch list. And you look for those individual stocks to hit those points where maybe they've sold off 20 or 25% or more, even though the overall market, maybe they've sold off 20 or 25% or more, even though the overall market hasn't. And those are some of your entry points. You don't go all in. You start putting some money to work during those periods. That's an excellent point, and it's something that you do want to micro do, is look within both sectors and individual securities. An overall market correction is an easy trigger point. It's funny because I've been doing this for a little while, and when you're expecting a 10% market correction, I can't tell you how many times the market's gone down 9.9 and then snapped back. It doesn't give you the full 10%. So if you're waiting for that, you might never get the point of entry. So you should look at the individual sectors and individual stocks that you really want to buy that sell off a little bit more than that. Those are your entry points. It's a great point.
You know, one of the biggest news makers today, obviously Virgin Galactic, Sir Richard Branson's flight yesterday was historic, but it's also been one that has moved the markets. I want to get your take on how do you evaluate a company like this and this space overall, because it's so new to investors.
That's a good question. I look at fundamentals, and of course we want to get into the hype and speculation, but if you look at that company, they're basically charging, or they did charge, for about 600 seats. They've pre-booked somewhere between 200,000 and 250,000 per seat. There's only 6 seats per flight. So basically you're going to make about $1.5 million per flight. I don't know what their cost to operate the vehicle, create the vehicle, run it and pay everybody. But maybe it's more than $1.5 million. Now, maybe when they sell the next batch of tickets, they'll sell it for 400,000 or 500,000. Well, okay, that'll double how much they bring in, but what is the underlying numbers of what it's going to take to make this a profitable company? When you do that math, you're saying that's going to be a ways off. So you've got to look beyond that and say, okay, this is about the next wave of what are we going to do with space exploration? You know, when we're flying originally back in the day, it was like, I'm going to go from New York to California. I have a destination. I'm going to hang out there for a little while. That's a trip. Where exactly am I going, spending somewhere between $250,000 to $500,000? Where am I going? Am I going anywhere and enjoying that? Or is it just about the beginning of this? And so, look, it might be a long ways off before you actually turn a profit. That doesn't mean you can't make money in stocks like this as we move to this next wave, but we don't really have it all played out. You have the competition of the 2 or 3 different companies that are all going to vie for this space. But how many people are lining up to drop $500,000 to take a ride with no clear destination? I don't know. That means that the profits are a little bit of ways off, if you ask me.
I mean, certainly the fundamentals at this moment just aren't there, but I kind of think of, let's go back to Amazon 27 years ago. Right? This is a company that we never would have imagined. Investors back then never would have imagined that it would become the disruptor that it was. It went for so many years not being profitable. Everyone really not being able to see the vision that Jeff Bezos had for this company. Is there any potential? I know it's highly speculative at this point. Is there any potential for the company like Virgin Galactic and this space to become the future 20 years from now Amazon in this space?
It's a good question. I don't know, because I don't know where we're going. Like, I know that I wanted to buy some batteries and I want them to show up tomorrow at my house. I get that. I don't know where my destination is. Look, if you can cut my flight from New York to California down from 5.5 hours to something far less than that, I might be interested. I don't know what that looks like, how much it costs, and whether that's feasible. I don't. But to take me out to space, you know, where am I going? Am I going to go hang out on the space station? Maybe I am. I don't know. But the numbers have got to come down for most people. What is your target market of people who could spend $250,000 to $500,000? Now, it will come down eventually, and maybe down the road there is some destination we're all going to go to. That would be wonderful. I just don't know what that looks like. Where Amazon, nobody could see the vision of all that we're delivering now. But it was there, and you're right. He, for so long, was like pro forma earnings, and we're like, what are pro forma earnings? We want real earnings. And eventually, he had real earnings, so you got to give him credit. Maybe they're on to something here as well.
Yeah, we certainly know Jeff Bezos deserves the credit, well deserved, for the 27-year performance that his company has had. And to your question really quickly, $2 million is what the company Virgin Galactic is saying is their market opportunity. People willing to pay between $200,000 and $500,000. But I think you certainly have a point when in terms of scaling this. How do we scale it, and where's the end goal beyond just 4 minutes of weightlessness?
Exactly.
All right, thank you so much, Doug Flynn, certified financial planner and co-founder at Flynn Zito Capital Management.